All right. Back in the action once again. Hope you guys and gals had a fantastic day out there, but it's time to get back to work tonight. We're getting ready for tomorrow's hump day trading session. And of course, it's Tuesday evening after all. It's June the 2nd, 2020. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job in this video is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you tonight. The charts are all prepped up in the background. As you can see, we got the E-minis, we got some gold, we got some crude oil. I have a lot of great setups I'm watching for tomorrow's Wednesday's trading session. We'll break down the entire plan tonight on this newsletter video. And speaking of which, before we jump into the video tonight, though, I just want to remind you guys to make sure you subscribe to our YouTube channel. That way you never miss all the great stuff we publish every evening on this video. And don't forget, if you have any questions about anything we talk about tonight, drop those questions in the comment section below. I'll get them answered after I finish up here this evening. And as always, I really appreciate you guys carving out an hour of your busy schedule. If you tune in every evening to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me, will ya? Always appreciate you guys showing your support for this channel here and tuning in every evening. So subscribe. That way you don't miss the next one. Drop those comments in the comment section below. Hit that thumbs up button if you tune in every evening and rely on this video. But let's get enough of the introduction. Let's get this video going tonight. I'm going to kick off tonight's session, though, by checking the calendar for tomorrow. Get some big news tomorrow. Some of them you may not be aware of. Let's make sure we take a look at the schedule here. Tomorrow, of course, is a Wednesday. It's the third day of this kind of first week of a new month, right? First week of the month. Now, as I talked about in last night's newsletter, anytime we're looking at the first week of the month, we always know the big news is coming on Friday, right? So we know there's the big, kind of the big kahuna, the granddaddy, whatever you want to call it, right? The big news, the whale news is going to be on Friday morning. That is the employment number, right? Also known as the non-farm payroll number. So that's the big news of the week. As you may recall, tomorrow, or should I say Thursday, we got the ECB announcement, virtual broadcast on Thursday morning. That'll be big, especially if you're in Europe or if you're in Asia trading before the U.S. markets open up. But as we look into tomorrow's trading session, really there's a lot of important news here. First of all, you get the ADP employment report at 8:15. Then you get the PMI services index, the factory orders at 10 o'clock. ISM non-manufacturing at 10 o'clock, and of course that petroleum status report. So there's a lot of news on the calendar here for tomorrow. But make no mistake about it, the big news for us tomorrow is that ISM non-manufacturing index. Anytime I see ISM, I talk about this all the time, right? Anytime we see ISM, like we saw on Monday at 10 a.m., you got to be at your desk around that time tomorrow morning. So if you only had 45 minutes to an hour to be at your computer tomorrow, make sure you're logging into my trade room and come out and join me between that probably 9:45 to 10:45, right? A little bit ahead of it, you get the charts all prepped up and trade the reaction right to that news. Now, as always, we'll be in our trade room every morning. We open up at 8 o'clock Eastern time. By the way, I'll put all of the registration information if you want to come out and trade this stuff with me tomorrow in the trade room. I'll put all those links for you guys in the description of the YouTube video. But the bottom line is, though, we'll be here tomorrow all day, right? So we'll start off tomorrow at 8 o'clock Eastern time. We've got some news at 8:15. We got some more news at 10. That 10 o'clock news, though, is really potent, that ISM manufacturing index. Then later on in the morning, get that weekly petroleum status report. Now remember, this was on Thursday last week, right? So last week we were coming out of that holiday weekend, right? So this was on Thursday last week, in case you're relatively new to this stuff. We're back to our normally scheduled programming, right, this week, right? Full week. That means every Wednesday, 10:30, we get the inventory report. Now, what you want to be aware of is that this market becomes really weird after about 10:15. Sometimes it's even earlier than that. Sometimes it's 10 o'clock. But my rule of thumb on a Wednesday, when it comes to oil, keep in mind, this is only oil, right? Nothing else will be impacted by this. It's just oil for tomorrow, right? It's the petroleum status report, for crying out loud, right? So it's not going to impact gold or the E-minis. It's just going to be on oil futures. So after 10:15, that really means the window is smaller tomorrow for oil, right? So the vast majority of what I'll be focused on tomorrow, things like gold, right? Things, of course, like the E-minis, those will likely be where you're going to get the best setups, right, for tomorrow. But if you're trading crude oil like we are in the trade room, get to it early tomorrow, because after 10:15, and usually on the back end, it'll be about 10:45, right? 15 minute before, 15-minute after. Now, I know there's a lot of volatility that usually comes around that news. That volatility, don't let it fool you. It's very unpredictable. It's very illiquid. I tried this many years ago. It feels like a lifetime ago. I no longer try to wrestle that bucking bronco, the petroleum status report. You're more than welcome to give your money back to the market if you want to. I'm going to stay away from that tomorrow from 10:15 to 10:45. We'll find some lower hanging fruit on other markets from that in between that 10:15 and 10:45. Now, it's also important to keep in mind too, there's a lot of hoopla around the oil markets right now. Next week, there is an OPEC meeting that is scheduled. I believe it's the 9th, right? I believe that's next Tuesday. I keep hearing rumors that they may plop that into Thursday or Friday. And at that OPEC meeting, they're expecting to basically extend the production cuts. And that's what's most likely going to keep on feeding this market going higher. We talked about the oil markets last night and how there's both technical and fundamental reasons for traders to be buying them, right? The fundamental reasons being, of course, the reopening of the economies, right? Getting people back on the road again, back in the factories again. That requires oil. At the same time, you get a lot of technical clues right now that suggest a move back up into that low 50, right, high 40 area. So we're making our way up there, and we talked about that last one, obviously. Just be aware, though, this is something we're kind of watching closely here right now as it affects the price of oil. Tomorrow, we got that news report. We know the news, right? We know for sure the news is at 10:30. What we don't know is, will we keep hearing more, lead ups to that OPEC report coming out next week? That will be some intangibles, right? We're watching here for tomorrow. And speaking of intangibles, I mean, you know this already, right? The rhetoric going on right now between the U.S. and China is creating some extra tensions there. It sounds like the phase one trade deal is holding up pretty well, considering the fact that there's a bit of finger pointing back and forth regarding the coronavirus, right? And speaking of coronavirus, that has taken a back seat over the past couple days. You would never even know we just came into lockdown. That has taken the back seat now to the kind of civil unrest going on in the United States. Doesn't seem to be affecting the markets too badly, but I wonder if these protests / riots, whatever you want to call them, if they continue into tomorrow, if they continue the rest of the week, I wonder if the markets will start to notice them, because as of right now, it doesn't feel like I don't mean anybody, but it doesn't feel like the markets care, right? The markets, they don't have a conscience, if you will. You know what I mean? So it doesn't feel like the markets care so much right now. Will that start to creep in tomorrow? Will people be distracted by that? Those are some of the intangibles we're watching here for tomorrow. So again, just a quick recap here. 10 o'clock, that ISM non-manufacturing, that is the big kahuna for tomorrow. Will we hear from OPEC tomorrow? Will the unrest in the U.S., right, mainly just a couple key cities in the U.S., will that continue tomorrow? Will it affect the markets? And will this bickering back and forth to the U.S. and China, will that impact us? That is all the stuff we're watching tomorrow. And again, we'll be doing this stuff together in the trade room. Grab those trade room link to get registered in the description of this YouTube video. Let's get ready for tomorrow, though. Let's get ready for the charts here we're going to need for tomorrow. We got everything ready to go here. S&P is ready to go. Oil is ready. Gold is ready. Boy, there's a lot of really interesting scenarios here. Let's start first, though, on the S&P here tonight. If someone was to ask me to describe, right, what is the S&P right now, I would say we're bullish. We had that strong move higher at the beginning of the session, right? That beautiful pullback right into that battle zone that we talked about on last night's newsletter. We really saw that beautiful pullback, that failure. So if you were watching last night's newsletter, you were ready to capitalize on that pullback. But of course, right, that big bull move up, right? Anytime we see a big bull move anytime we see a big move any direction, what do we expect? We expect to see a two-legged pullback and a retest of that high. And that's exactly where we are right now. Right. So how I would describe this market is it's pretty straightforward. We saw a big, strong bull run up. We saw a two-legged pullback and a retest the high. In between all of that, there was, I think what is probably going to be seen as a range, right? And that range, as you know, right, becomes a magnet. And this is a really interesting scenario here because, first of all, and you can see I've got this measured move marked up off these two legs. Let me get that out of here so you can kind of get a clearer picture on this. But the biggest, most important takeaway right now is we're bullish, but we're at a major level of resistance. That is the biggest takeaway, right? We're bullish, but we're not in a very good location to buy. If I buy right now, I'm buying high. I'm buying at resistance. I'm buying in a location where I would expect other buyers who bought down here are taking profit. Not a very reliable spot to be buying. At the same time, if you look at this as a range environment, which it definitely is, right? One bottom, one top, two bottom, two top, three bottom. I count it like that because you got to make sure you've got at least two tops and two bottoms. That qualifies the range. And no, it doesn't need to be exactly double top to bottom, but it needs to be close. And that's obviously very close. And three on the bottom, right? Two on the top. Definitely a range there. Why do I care about that range? Because what is a range? A range is a magnet. And so we know that if the buyers who are, we assume, sitting at major resistance, if these buyers, if they can't do something here, they're going to probably get dragged down in, right? It's probably what's going to happen. They're going to drag down into that, right, into that magnet underneath. And for all I know, they may get spit out the other end, and we may see this thing end up down around these lows from today underneath the weekend gap. So there's a lot of potential for both bulls and the bears on this right now. Boy, if I had it my way tomorrow, what would I look for here? If I had it my way tomorrow, I would look for a pullback down into this rising support. I would look for sellers to think this market has reversed, get them short, right, off that high, thinking they're going back to fill the weekend gap, which is, like I mentioned last night, is Friday's close. We'll leave that right on the chart. I'd like to get those bears to try to short this sucker and then hopefully trap them in and buy right into their stops. That would be the ideal if I could kind of paint my own picture for tomorrow, right? I'd get that pullback. I'd get those bears, right? Let me get that a little bit small there. Get that pullback, get those bears coming in and beating their chest and trying to get all, right, trying to control this market. Once I see them commit to it, then I would go in, float my order right above that high right there, right? Get those stops being bought. And then hopefully before we go back up to retest the big high, I can grab the pullback, right? That would be ideal. That would be my kind of my failure into a pullback combination, right? Now, this may not pull back like that, right? It may not pull back. I think the biggest challenge we have right now is I can't buy right there. I just can't do it. My rules don't call for it. I'm not a breakout trader, right? Breakouts are just not very effective. So if we keep going higher here, one pattern I'm definitely looking for here is a two-try trap. And that would be as the moving average comes over, right? We see a shallow pullback, now a higher high, and then we grab the trap from there. The reason why I would like to see a trap here as it goes higher is because I know I have that measured move there. Right. So if we don't pull back, if we do keep going higher, again, this may be a little bit higher than that. We may go a little bit higher like that. Moving average comes over now. Shallow pullback, higher high. I know where the objective is. I don't want to buy high. Looking for that trap because it's a very strong move here. That's not the question. It's a very strong move higher here. So it's no doubt about the direction or momentum at this point. It's just, can you prove to me that you're not just simply retesting the top and coming back down into that trading range? Another pattern I'd love to see if we go higher here, assuming that if the measured move isn't what they want, the 3,100 darn is, right? That big round number is a very attractive number. So if we were to, let's say, for example, we run up, we pull back to the moving average, and we blast through that now, right? We jump like, what measured move, right? I don't see a measured move. If that happens now it becomes pretty easy. Now we know where they're trying to go. Now my job is very simple. Mark up those highs, and you'll see an example of this on the oil in a second. Find that channel, right? I usually like to grab the low, the big low down here. That's usually where you'll find the best one, the best channel there. Once you get the highs, then you know where what the trend looks like, and then look for that first pullback. This would be what I call a 1, 2, 3 breakout. And I know, I don't want to buy the first pullback here because, again, I want to see it prove to me, then I can buy that trap. If it just pulls back and goes, I get it. I don't want to miss that move either, but it's all about location. And remember, guys, we're not optimizing our strategy for the number of trades. We're optimizing our strategy for the quality of trades, right? If you want to optimize your trading strategy, optimize it for something that actually matters, right? Not just more trades. I think all of us have made that rookie mistake before, right? Don't use faster time frames. Don't use more indicators. Don't dilute your strategy with more setups. Don't be less restrictive. Don't be easier to get in, right? Be selective. Optimize for quality, not quantity. So that's why I'm not buying that first pullback, right? I'm buying that next pullback as we go from there. So those are some ideas as we go higher here, right? As we go higher. Now, as we go lower, the one thing I do want to be aware of is, there is possibility. It doesn't look like it right now, but, like what gold did, right? Gold kind of jumped and then finished in a range. There's possibility here. It doesn't look likely right now, but maybe we end up just kind of chilling out up here. If we happen to spend the next few hours, I would say if we spend the foreseeable future until midnight, right, going sideways on that would be a new range, right? And that new range, obviously at that point now, would put the magnet, if we get a new range up here, the magnet moves from the range before, and it basically moves right up top here, right? So that's where the magnet becomes. What's the best way for me to trade a bull market into a range? Now, we talked about this last night, I believe, right? You always want to latch on to some level of support, which could easily be seen as that area right there, that trend line coming in. Remember I said last night, right? Find some level of support to latch on to, and then simply wait. Wait for those buyers to run out of bullets. Wait for that pullback. The moving average will come over. And at that point now, I'm waiting for bears again, right, to try to short this thing off the high. One of my favorite parts of this strategy is when we're bullish, I love to just wait for a pullback to support and then look for the time when the bears, the other side of the market, gets trapped. And because I was a rookie at one point in my career, I know exactly what rookie mistakes look like. I almost laugh at them when I see them happening because it looks like I'm looking right in the mirror again. But I'm looking for those rookie mistakes, like trying to sell that breakout pullback, and I want to capitalize on that by buying into those stop losses. So again, I'm combining key levels of support below the low of that range and using a failure pattern, right? I'm waiting for sellers to get stuck on the wrong side of the market and buying into those stop losses. Now, I'm wondering too, though, what if we don't go sideways here? What if we go right back into the range here and then we start going sideways? This is where things become pretty easy, right? Relatively easy. At that point now, we're back inside the magnet area. And of course, at that point now, I'm focused on selling high. I'm focused on buying low. I'm going to sell high with buyer failures up above the top of that range. And again, this is the prerequisite here is we have to go back into the range and spend a couple hours in there, right? So it's not going to be like we just dip back into the range and then jump back up, right? We spend some time going sideways. It confirms they're back inside that range. And at that point now, I'll wait for those bears to run free or to run out of bullets, wait for it to pop up, wait for the buyers now to try to buy this pullback. Remember, this will still be the high. Right, this will still be a major top up here. So horrible spot still, right? If we pull back at that point, and go to the range. Horrible spot to be buying, right? Hopefully the buyers don't check that before they buy, and we can sell right into those stop losses, right? Another example, this would be a buyer failure pattern. As you can see, I love to find opportunities, especially in range-bound markets. Like I said last night in the newsletter, love to find ways to anticipate those breakouts, anticipate pullbacks, and trade directly into those exits. Now, of course, if we do end up going lower here, let's just say, for example, right, the market really tumbles and collapses here, there are some options down here. One thing is for sure, if we do see a strong move down, and if they hold the pullback off the moving average, then we have what? Then we have a 1, 2, 3 reversal, right? 1, 2, 3 reversal pattern. And that reversal pattern, we definitely want to be a seller when we see those reversal patterns. The target at that point will be down at those lows. The target really at that point is back into that range, right? Back into that range from last night's newsletter. But the big thing here though is, right, the big thing here is if we do get that strong move down, right, we do get that pullover and they jump off the EMA, that creates the reversal, right? We don't just sell that first pullback, right? Because as you probably can tell, right, selling those pullbacks underneath the range isn't exactly the most reliable strategy. So I'm not gonna try to be a seller on that. Again, optimize for reliability, quality trades rather than quantity of trades. Mark up that low, mark up that high now. That becomes my new channel. And now I'm looking for that first touch of that new hidden channel. Again, we call these 1, 2, 3 reversals, 1, 2, 3 breakouts. It's the same basic pattern, 1, 2, 3 going higher, right? It's just to make sure that you get momentum on your side. And when you get those nice big 1, 2, 3 breakouts or 1, 2 reversals, that follow-up pullback is really reliable. Now, what if we don't get that reversal? You know, what if we just run lower here into the range, right? And then we spit out down the other side there. Now what do we do? Well, now if we don't just reverse with that 1, 2, 3 reversal, and this could be either pretty much a straight line down, right? It could be almost a straight line down. It could be a run down into the range and then go lower. But the reality is once I get down here, right, whether it be a pit stop in the range or whether it be a straight line down, it'll probably be a pit stop in the range and then down. At this point now, I want to be a buyer down here. And the goal would be, again, as I always remind you guys, to really anchor onto some area of support, right? Maybe it's a swing. Maybe it's going to be my mouse works there, right? Maybe it's a triangle level, right? So we end up down, we're at these areas of support down here. Now, once we get down there, now that momentum is really strong for the bears, right? We don't want to be a buyer too aggressively. So what do? We use what we call a nested failure pattern, right? 1 try for the bears, 2 try for the bears. The ideal scenario on these is 1, 2, and a trend line, right? Some sort of trend line here. You can see, right? Big, strong push down. Bears try once, bears try twice, right? You can see it right there as they use a similar pattern there before. So, imagine that pattern kind of over here. And again, as I mentioned before, right, just like this one earlier, it's at a level of support. That's the trick when it comes to trading with ranges. Now, ranges are really common in today's market, so don't forget to come out and join me tomorrow, and we'll do it together in the trade room. If you're not with me tomorrow in the trade room, the next best thing is to grab our free trading course, because I talk a lot about range-bound markets, failure patterns, breakout patterns, and everything in between. So grab that link I just popped up there. Grab the free trading course. You'll love the free course. It goes over all my favorite setups, the same strategy we use in our trade room. Everyone loves that free course. I think you will as well. Pause the video if you need to. I'll be here when you come back, but make sure you grab the free course. Get registered. That way, at the very least, at least tomorrow night when you come back and watch my next video, you'll be able to follow along with me and you'll know what the setups actually look like. All right, I think we have a pretty good plan here now for the S&P. We got a pretty good idea of where the best entries will be, some variations of that. There will always be a lot of other possibilities. And don't forget, we'll do that together tomorrow as we see more details in the trade room. So there's some reason to come out and join me tomorrow in the trade room. All right, let's grab some oil here coming up next. Now, oil, like I mentioned, oil is really under the gun right now as far as a lot of fundamental pressure, a lot of technical pressure. There's kind of a question mark, right, hanging over right now. Will they extend out that production cut that I mentioned earlier? So we know that oil is certainly on our radar right now. Tomorrow is a news day. So again, be aware the window of opportunity tomorrow will close rather quickly. If someone was to ask me, how would you describe this market right now? I would say we're pretty much 3 legs up. We've got that big leg, of course, coming off the low yesterday. This second leg, it looks like they kind of discounted that second leg, and you know they discounted the second leg because you can see the third leg, right? The third leg, I mean, pretty much just dead on accurate there as far as that triple measured leg. Now, whenever I see a triple measured move like this, 3 legs oftentimes means a range. So you do want to be aware we may start seeing a range here around that $37, right, a barrel area, maybe higher, maybe a bit lower. So don't be surprised if we do see a range going forward tomorrow. We may not have to deal with the range tomorrow because of this, again, because of news coming out and because of, there is kind of this gravitational pull towards that $40 a barrel level that we talked about last night, right? So major news, of course, expected tomorrow as well. So I'm looking for a range, but ideally, I mean, look at this. We've got a relatively strong move higher here. Pretty low volume today overall, right? Kind of summertime session on the oil, which, by the way, summertime won't really kick into high gear until the month of August, right? June and July are usually very, very good in the trade room. This week's been a bit slower. I think a lot of folks have been distracted lately by the current events happening right in the U.S. right now. But I wouldn't be surprised if we get back to the action tomorrow with some high volume environments here before we go into that Friday jobs report. The bottom line, though, is I would call this or describe this as a bull market. 3 legs up that just finished off a very strong leg higher. Anytime we see a strong leg in one direction, we always expect what? We expect a 2-legged pullback and a retest of that high. So the odds are very good that we at some point tomorrow that we end up back to retesting that high. And if I could kind of call my shot ahead of time, I'd like to get this thing down to the low of this channel. You know me, right? I always want to buy at support in the bull market. So when I see a market running higher like this, right, this is basically a 1, 2, 3 move. As I mentioned earlier, I'm marking up those highs. I'm marking up that low. It really fits well there. And again, if I could kind of call my trade for tomorrow, right, I'm looking for a buy off of that low. That's pretty basic stuff, right? But how exactly would I structure that entry? Well, it really all depends on kind of how the pullback looks. One thing is for sure, we get a lot of bullishness in this market right now. We may not get down to that trend line. We may not. It's just a reality of the situation, right? What I would rather do is at least get into that 36.40 area. So let's talk about a shallow pullback. If all I got tomorrow was a real shallow pullback here, right? What I would do is, and again, we got a lot of bullishness there. If all we get is a shallow pullback, the goal is traps, right? And that's just to avoid buying high. So if all we get here is a shallow pullback, your job is to find a way in without just buying high, right? And to do that, I'll look for a pretty simple pattern. It's called the 2-try trap pattern. This is a little bit more of an advanced way to use it. But, the idea is pretty simple, right? If we don't get a real deep pullback on this, buyers have to have some way of first seeing proof that it holds and then find a way in. It's not buying too high. Right? This is my way of being aggressive while still being conservative at the same time. This is about as aggressive as I'll get on a shallow pullback. Now, with that said, if we pull back a little bit lower, right? This is where the easier stuff comes in, right? We pull back nice and deep. We get down to the low of that channel. The moving average comes over, of course, right? And now I've got bears now thinking this market now has reversed, right? It'll probably look a lot like this. where it pulls back underneath the moving average. The bears come in, they think, okay, we're done, and we can now be a buyer right into their stops for an easy snap back up to retest the high. That is very much what my goal would be here on the deeper pullback. So a deeper pullback now, moving average comes over. And remember, what you want to look for is there are two opportunities on these pullbacks. One is going to be that seller failure as the bears come in and try to get short off the moving average. The other one is that pullback as we go from there, right? Remember, this is a very common where we see a failure into a pullback combination. Now, I'll tell you the same thing I tell all my clients, right? If you don't feel confident with that failure, just wait for the pullback. And also, too, keep in mind, too, that sometimes we don't get that pullback. So let's say, for example, we get the deep pullback, we get the failure pattern, okay, but then what happens is the market just rips, right? It doesn't pull back at all, right? When that happens, you'll usually see another one of those traps. So keep your eyes open on that. Just remember, right? We buy at support. We buy as the market's pulling back. If you just make sure you kind of use that litmus test, speaking of test, I use a checklist every trade we take in the trade room. And one of the most important rules of that checklist is, are you buying at support? Right? Are you buying at support? So if you're not buying at support, you're probably buying too high. So as the market runs higher here, I'm always thinking, okay, if you're not going to give me that pullback to the moving average I want, at least give me a shot to buy at support, because that's what pros are. Right? That's where pros are. The rookies are buying way up here, right? And the rookies, when they get stopped out and they see that nice big signal candle coming in, those are pros buying it, and the rookies who get stopped out because they buy high, they end up chasing after it, and it fuels the move here now, hopefully all the way up to that pending measured move. So those are some situations I'm looking forward to here. Traps, failures, and pullbacks. And again, this is one of those situations where it really all is about how we pull back and how it feels. I go over a lot of those details in the free course that I mentioned, linked up in the upper right-hand corner. And at the same time, right, we'll do it together tomorrow in the trade room. You can get registered with that link in the description of the YouTube video. Now, going forward here, if we do see a deep pullback, right, let's just say, for example, the market's knocked down, right? Big knockdown now. Now, remember, there's a big difference between a strong move down, a pullback to the moving average, and a jump off the moving average. What is that? That's a reversal. Now, if that happens, where do you think we're going? We're going back to 35, most likely. Right? Now, I really don't care where this is, but if we get a 1, 2, 3 momentum move, and we get all that bearishness coming here, and again, I'm not going to sell that first one for the same reason why I wouldn't sell that one back there. Those are very unreliable setups. I'm going to wait for that next pullback and look for that next pullback, right? That's the one that you want, right? That's the 80-85% chance of winning compared to the 35 to 40% chance you have on that first pullback. We're optimizing for quality, not for quantity. So remember that, right? If we do get a 1-2 reversal. But what if the market's knocked down, right? What if it just kind of gets knocked down here, straight line down? Now what are we thinking then? In this situation, that momentum becomes really difficult. So in these situations now you're thinking, okay, we're still bullish because we haven't held the pullback yet, right? But we're definitely very bearish right now, right? Momentum is very bearish. In these situations, you want to be very careful trying to get too aggressive on that failure, right? They will work sometimes, but what you want to remember is that failure will oftentimes go up and they'll try it again, right? And once they get that 1 and they get that 2, right? Ideally would be a trap, or at least the bottom below that low, right? That is a beautiful entry. Or a lot of times what happens is you'll get that strong move down and it kind of gets delayed out, right? It kind of goes over 1 and then comes over again, and then you draw that big trend line up. This is my favorite one. These are my favorite kind right here that take a while. They take a while to develop, but they're worth it because everybody thinks the market is bearish, right? And what happens is they end up using the underbelly of these channels, right? The bears try once, the bears try twice. At that point now, you've got the buyers buying because the buyers want to buy low. You've now got the rookie sellers, the professional sellers. You've got everybody roped in. And once that big, strong signal candle blasts off that trend line, all those sellers, right? They're thinking, shoot, they got me again. I shouldn't. Why do I keep calling tops in this market, right? Why do I keep fighting this? I should have got out of stock twits. I should have got out of the chat room. I keep listening to these things, right? That's what's going through the mind of those counter trend sellers, right? And the market will race higher here. So those are some ideas there on the pullback. And you know what, again, as I mentioned, if it does collapse here and they hold that pullback, we're not going to fight it any longer, right? I don't care how bullish the economy is and how bullish the recovery is, right? We're looking for that follow-up trade thereafter. You know, don't forget, again, too, right, it's a good chance that we do go sideways here. If we do go sideways, not a lot changes. Just want to make sure we try to incorporate those levels of support, right, with your entries on ranges. Get underneath that range. Get that moving average coming over. Get those bears to wrap that rope right around their neck, right, and then hit them right into their stops when they fail. Another thing I'm watching here, just because of the kind of the perma-bullishness that we're seeing in this market right now, if the market does keep kind of floating higher, right? If it does just kind of keep on grinding higher right now and kind of creates what's probably going to be seen as a spike in channel, not a lot changes here. Not a lot changes. I will definitely adjust my channel, of course, and that channel will come higher. Then I'm looking for pretty much the same basic idea here, right? If we do keep going higher here, I'm going to keep on adjusting everything. I'll move that up. I'll wait for that pullback. I'll look for that failure. Now, this may take some time to wait, right? It may come a little bit later on, but it will, trust me, it'll be worth it. Want to get that pullback, and really the goal will be as it goes higher here, you know, we're waiting for that pullback in, and the same basic idea applies on the type of pullback, right, that we get. Is it a shallow pullback? Is it a really deep pullback? And we'll talk more about that obviously tomorrow once we get our hands dirty, right, on this chart tomorrow morning. So make sure, again, you grab the free course I mentioned to learn the details, or again, I would definitely encourage you grab that link in the description and get registered for tomorrow morning's trading session. That way you're right there with me. Now, how about some gold here? Wrapping things up here on the yellow metal tonight. Let's see here. If I was to describe this market, what is this market doing right now? It's the tale of two ranges. We had that range from earlier this week, basically from last week that bled into yesterday, the first day of the week, Monday, and of course, pretty much most of the day today. And then, of course, something happened, right? Something happened and spooked this market here. It may be the fact that the S&P just keeps on shrugging off all this bad news right now. It has a very interesting effect on this stuff. So, you know, that may be happening right now, and that strong of a move, anytime I see that much strength in one direction, I always know I've got to lean on that direction here, right? No matter what that range is, right? You'll notice though, see what's happening now? A new range down here. Now you got to go a little bit detailed in this one to see the range, right? But it goes down, up, down, up, down, up. So it's kind of a tale of two ranges. We went from one range, right, all chopped up there, and then slamming lower into another range. Now we've been down here for a while. This is not a spring chicken of a range here, right? We've been there for 6 o'clock Eastern time right now. We've been there since 1 o'clock. So we've been there for quite a while now in that range. So the way I look at gold right now is it's a bear market into a trading range. We talked about the strategy for this stuff last night for a bull market. So there's my range. I run down into that trading range. What's my goal now? My goal is to sell above the range, anchoring the entry on some key levels of resistance. For example, I draw the trend line off of that low, the low to low. I pop it to the highs there. That's a great looking spot, right, for resistance. At the same time, if I look left over here, There's a bunch of lows over there, right? That creates what I call a reversal line. That is a very good spot there as resistance as well. So those are some pretty attractive areas there. We've got, again, a lot of momentum going lower into a range. I want to find a way to sell off the high. So if I had it my way tomorrow, we would poke our heads up into my battle zone, get these buyers to come in and get them to try to, right, to buy this thing going back up into that range. I'll simply wait for those buyers to confirm and then drop my order in, right, to sell into those stop losses, right? So that's definitely something that we are looking forward to here tomorrow. Now, keep in mind also, too, if this thing really shoots, there's a possibility here we may see it jump right back up into that range again, for crying out loud, right? It's a range, obviously. And so ranges, of course, are magnets. So if it does push above that range, we have to think that's the next magnet. What would it look like, though? What would a reversal look like? There are kind of two reversals that I would be looking for. One would be the jump up, the pull back to the moving average, and the jump off the moving average. That would be an instant reversal. The goal on that one now would be getting in before we get back up into that trading range. I want to grab that, right? Grab that high, find that low, and buy the low of that new channel. What do we call those again? We call those 1, 2, 3 reversals, 1, 2, 3 breakouts. It's that strong jump off the moving average that really gives it away, right? The best setup on that one is that first entry long off of the low of that channel. Another potential setup here, if we go back in time here, would be a strong run up. If we see for example, a strong run higher, we don't pull back, right? We're not going up and pulling back here. We're making a strong run higher. This is where that two-try trap comes into play, right? So strong move higher, no pull back to the moving average very early, shallow pullback, higher high. Yeah, now you know exactly where the best entry will be. It's that two-try trap pattern, right? That two-try trap pattern there that we love so much in the trade room, right? That higher high. Again, it starts with a strong move up, shallow pullback, higher high into a trap low. Again, all of this is kind of, the prerequisite here is the market's back to bullish and we're before we get back up into that trading range. Let's just say, for example, you go grab a cup of coffee, and when you come back after the cup of coffee, right, we're already up inside that range again. Then what would you do? If the market just finds a way to slip back into that range again, now we're right back to the plan from last night's newsletter, which is we're bullish, right? We're inside of a range now. And if that's the case, honestly, it's probably not going to go straight up. You know what I mean? It'll probably do something like this, where it runs up, right? It pulls back and then goes up, right? It'll be kind of like a very shallow pullback there. Okay, so that area right now, that's your best friend, right? That little swing right now, that becomes your best friend for tomorrow. So if we do end up back into that range, look for, right? Look for that, and again, there could be a lot of different tools to use on this. We'll look for some trend lines down there, right? Use that as key levels of support. We'll fill in a lot of these gaps tomorrow in the trade room tomorrow. But again, the basic idea here is get this thing to pull back underneath that range. Get into some key support levels, get those bears to foolishly try to trade that breakout, and just simply buy into those stops. So that's a very easy setup. It would require some patience. That obviously we don't want to trade inside the range because the range is so messy. I want to buy underneath that range. That'll be a whole lot easier on my emotions and on my bank account as well. So that's a pretty easy strategy there, I think. Pretty easy, right? What do you think, right? Everything making sense so far? Don't forget to hit that thumbs up button on the video tonight. Drop those questions in the comment section below. And I'll tell you, we're almost 45 minutes in this video right now. Hashtag still here. If you're still watching this video right now, you are the guy or gal I do these videos for. The people who are dedicated to this as a business, right? Not just as a hobby. So hashtag still here. Hashtag 1%. Really great to have with us here as well. But hopefully this makes sense. If it doesn't make sense, right? Post me a comment in the comment section. Let me know, right? And I'll make sure to circle back and make sure to provide some clarity on that. So those are the ideas as we go, right, as we go higher here. Now, what if we keep going lower? If we keep going lower, let's say the market grinds lower here, what will that be? That'll be a spiking channel, right? Spike and channel. Now, what do spike and channel patterns tell me to do? Well, first of all, spike and channel patterns tell me that we haven't seen a very deep pullback yet, and we're very low on the chart. Okay, that's the way you should think about a spike and channel pattern. Spike and channel patterns, they start off with a big, strong move down, but they never give us that deep pullback that everybody's waiting for, right? And so what happens is they roll over and they roll over. And, you know, there's a thing called the rule of threes. And with spike and channels, most spike and channels are going to give you that rule of three. Now, the first one is always difficult because you're being forced to sell very low. The second one, though, isn't as bad. The third one, basically the first and the third ones are the ones you're going to be careful with, right? Because those are the ones that fail on. That second one, though, is really a great trade if you're there overnight and you're watching it. For the rest of us, though, we'll probably come back, later on as we see this thing kind of tumble lower here. This spike and channel, it doesn't change very much. It just tells me we are still waiting for that deep pullback. And so I'll continue here to look for these lows. I'll continue. And at that point, what I'll do is I'll put a lot more emphasis on the lows that we're seeing and then use that. So for example, we may see something like this where it rolls over and goes steeper. Right? And so rather than drawing off of that one there, I'll use these lows, right? And then up around those highs. And the same thing, pretty much same idea here, right? I'm looking for a level of resistance. I'm waiting for a pullback. And usually it's going to be a trap above one of those prior swings into one of those buyer failure patterns we love so much, right? Into a pullback as we go down, right? So buyer failure into a pullback from there. Now, again, this is going to require a little bit of finesse tomorrow, so make sure you come out and join me tomorrow in the trade room, because as it goes lower, we'll mark up those lows, we'll find the best fit off the high, we'll identify the trap, the failure, and the pullback together. I'm excited to see you there tomorrow. It's a Wednesday. Remember that ISM number tomorrow, really, really important number tomorrow, so make sure you're at your desk at the right time. And don't forget, if you want to get registered for tomorrow morning's trade room, I'll put all of the membership information for you right below the video tonight on the blog or in the description of this YouTube video. Now, don't be afraid to call me this evening or anytime for that matter. That number always goes right to my hip. Well, do folks still wear their cell phones on their hips anymore? Last time I checked, that was kind of I don't think they do that anymore. So I will stop saying that for the rest of my life, bro. Probably, right? These days it goes to your watch, right? Or to some other random device. I'm surprised not implanted in my ear by now. The bottom line is, all kidding aside, right? Yeah, send me my beeper. It beeps me when I'm gone. That really dates me, doesn't it, right? Anyways, call that toll-free phone number. It'll connect to anywhere I am on different parts of my body, right? May not be my hip. And don't forget to use that live support if you have any questions, right, on the chat there as well, right? So there's plenty of ways to reach out and get more information. And don't forget, too, if membership isn't quite right for you, grab the free trading classes as part of our free trial. Educate yourself. Learn about failures. Learn about traps. Learn how momentum is used. It's all covered in the free trading classes. And come out and see us again tomorrow, right? Tomorrow morning in the trade room, every morning, Monday through Friday. Hope to see you there with me. If I don't see you there, come back and see you tomorrow night. We'll do it again tomorrow night with a new fresh of the charts. Same great 3-step strategy. Guys and gals, thanks for being here. Hope you're having a fantastic day out there. Get some rest. I'll see you guys tomorrow, and we'll be back in the action tomorrow morning. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.